What's going on, y'all? Coming back with y'all today on a new video. We're going to be going over how I scalp, how I find my scalping entries, and how do I find high probability entries on a smaller time frame? Because I know it can get confusing, can get a little messy on the smaller time frames. So today, hopefully, this video can bring some, give some breakthroughs to whoever watches it, and definitely be able to implement this into your own trading system. Only if you back test it, find results on a demo account, and then if you feel confident enough to then go into a live account. And I just want to let everybody know that I am not a financial advisor in any way, shape, or form. So do not take anything that I say and run with it. Yes, you want to take my word for it, but you also want to go back into your own charts and back test this as well and train your own eyes to see what I see or similar to what I see. Don't just, say, oh, Jordan says, if you see a pattern, you can automatically take it without any kind of context, any kind of narrative. Please don't do that. All right. So let's get into it. So usually what I like to do is start off with the higher time frame. And I like to understand where the markets are going to be trading to according to the higher time frame. So today we can talk about an actual scalp. Well, it's a scalp position, but it's a scalp entry, but I'm actually holding it right now. So today on the NASDAQ, today is April 20th, 2022. And the reason why I was looking for, a buy to happen on this particular day is because of the framework I'm going to be going over with you guys, just so you can understand why I'm looking for higher pricing on NASDAQ and also on the other indices. So as you can see, if for those who have been studying ICT, you would understand what I'm looking at right here. And automatically, I established that this is my fair value gap, where I will be expecting bullish price action, once we trade into this to come into the market. As you can see on April 18th, 2 days ago, on Monday, this is what we got. And the result that we've been getting right on the following day, we had an up day. Today, indecisive candle. But I'm going to show you why I decided to take a buy on the specific day. All right. So one, I get my narrative from the daily time frame, right? The higher time frame. So that gives me what direction should I be trading in, right? That's one. Two, I need targets. What am I targeting? If I'm looking to buy, I'm targeting the highs in the market. If I'm looking to sell, then I'm targeting the lows in the market, right? And also, we can be targeting order blocks for value gaps, whichever one, but most of the time, I target liquidity in the form of a high or a low in the market, depending on my position. And lastly, the entry confirmation, which is what I'm going to be going over with you guys on the smaller time frames that I find for my entries. All right, so let's get started into it. So since I understand that I'm looking for price to be bullish, I'm expecting the lows to get taken, or whenever price trades lower, to find setups on the smaller time frames for a buy. And that's all you need to know when it comes to this. If you're bullish, you want to buy when price trades lower or below old lows, and as price trades higher, if you're bearish, you want to look for pricing to move lower as the price moves higher. That sets you up for an optimal trading entry in the set conditions, only if you know what you're doing and you know what you're looking for and you have your narrative for that day, right? It won't work if you don't have a narrative. It won't work if you don't have a target, and it won't work if you don't have a confirmation for an entry on the lower time frame, right? So in this case, I'm looking at this, right? These are relative equal lows. as liquidity. So what I do is mark off liquidity, right? This is SSL, stands for sell side liquidity. I'm not going to go over everything that I have on my templates, because if you don't know, just, please study ICT. This is where I learn majority of what I'm showing you guys today. Most of everything else, if I haven't learned from ICT, is from my own experience in the markets and what I've, seen happen over and over and over and over again. And, obviously I documented everything that I see. So I'll keep a note of whenever I see it next time, I'll have a understanding of what to do whenever I see it. So, right, this liquidity is being taken, and my trade was around the afternoon, right? I want to say like around 1 o'clock, 2 o'clock, going towards the end of New York session, and understanding that I'm bullish. All I see this price action, right, this fair value gap being created, all I see this as is liquidity being taken, right? And all I see is this price just gearing up for a buy, right? For the one, we have the 4-hour time frame where we're bullish. We have a bullish fair value, order block, excuse me. So when price trades into this, I would expect, or I would be looking for price to trade higher, right? That's the narrative. So now, the time is 12 o'clock. Let's go to 1. All I'm looking at on this is for either price to trade below, right, these lows, and then trade into this fair value gap. And with my experience, I've noticed and I've seen things like this happen before, where we would have, a break of structure, right, above the swing high right here. And then, price would trade into the fair value gap. And then we would expect, price to continue its bullish trend. But since one, we have this fair value gap. Okay. 2, we have the order block. Now let's go back to the 15-minute time frame. Now, this will be a great entry if price gave it to us earlier in the day. Right, this is going towards the end of New York session. And I'm not saying, because we're towards the end of New York session, this can't be a valid entry. What I was watching, as I was watching price live, right, prints out the candlesticks, I noticed that once price traded into this, right, and I was on a 1-minute time frame, it didn't give me a strong confirmation whether we are going to be buying or not, because look, we didn't have a fair value gap get created to the upside. We didn't have any structure get broken, excuse me. So that's why this area right here wasn't a valid area of entry for me, right? Which is why I didn't take the buy. Instead, I waited, and I understood, if we didn't buy out of this 15-minute fair value gap, then we're going to be drawing on liquidity. Where's liquidity? This low right here. There's liquidity in the markets above highs, above lows, right above every high and above every low, there's liquidity. I'm not going to explain why that is. Just go back into your charts and just back test whenever price either moves higher or moves lower. Look at the candlesticks. Look at the highs, look at the lows. What lows got taken? This low, these lows right here, price traded higher. Same thing over here. Before price moved lower, we took out a high, and then we dropped down. All right. So since I understood that, right, and this is the reason why I was able to adjust to this price action, is because of the experience that I have in the markets, not just from back testing, but also from watching price print out the candlesticks live. That's another way you can backtest, right? If you don't want to, I'm not gonna say if you don't want to, you should backtest old price data and also backtest new price data, right? And live backtesting, you don't have to take the trade. Definitely shouldn't take the trade. You just want to have different trading scenarios when you're live backtesting, just so you can see how the candles print, and you can see how the candles, whenever they're being printed and you're watching price live, they test your psychology, they test your patience, they test your emotions, they do all of that, which is why it's important not only for you to backtest old already printed candlesticks, but also the new ones coming out. Right. So let's go back to the 5-minute. Now, this right here, right, with the proper context, will be considered a bullish order block. But the reason why I didn't look at this to be a bullish order block was because of what we were doing on the higher time frame. Right, price traded into this order block, and we traded and rebalanced this fair value gap, right, from this high to this low right here. We completely rebalanced price. So now after we rebalance price, we're going to be looking to take out liquidity. I wanted to wait to see if price were either give me a break of structure off of this on the 1-minute time frame, which it didn't. There is no break of structure here. There is no clear swing highs. There's a swing low, but this is not a swing high. Right? I would not consider this a swing high. This, however, will be considered my swing high. So notice price, we dropped, we broke below liquidity, right? And one, the narrative is bullish. Two, I'm targeting the highs, right? This high right here, this high right here, these highs. All right, so that's the targets. And now we just need to look for the entry confirmation. So I'm going to let this play out. And I want to wait. Liquidity is taken. Bullish price action is expected because I'm targeting the highs, right? Price traded below a low. Now we're going to be looking to target buy side liquidity. And I just want to wait for, not just wait, but also see if price breaks above this swing high. Why is this a swing high? We have 1, 2, 3 candles, right? 3 candles form this swing high. And this is not a fractal, right? A fractal would take 5 candles to print. And by the time you would expect price to do whatever, you'd probably miss the move. So on this, I'm looking at this swing high. Right here, I'm looking at the swing low. Now, I want to wait to see if price breaks above the swing high and leaves me a fair value gap for entry. And in this case, price trades up. Even if we did pin past it like this, I would consider this a shift in market structure. Why? We traded below an old low. 2, we traded above a short-term high, right? This swing high right here. 3, we have fair value gaps for entries, for potential entries, excuse me. So now that we have our narrative, right, which is bullish, we have our targets, which are the highs, and we have our entry confirmation, which is the break of structure above this high after price ran into liquidity, right, sell side liquidity, and created a fair value gap. This would be for an entry. It doesn't matter where in the fair value gap you take it. You can take it as soon as price trades below this low, right, this candle's low, if price trades at 50%, or if price even trades to the low of the fair value gap. All 3 are valid entries, but to make sure that you get in for the entry, you want to make sure that you get in once price trades below this low, right into the fair value gap. Right. And usually whenever I do scalp, I give myself 250 pips of risk and 1,000 points, 1,000 pips of profit. But in this case, since I'm looking to hold, I'm going to be looking to trade above these highs and potentially the higher time frame highs. But for the sake of this video, we're just going to look at these highs right here. And this high, if we do trade up into it, it's going to happen tomorrow. But for right now, let's keep it simple. Right, we're going to be targeting liquidity. Right, we could target this high. And all we have to do is just wait. So one, we have identified our narrative, our targets, and now we have our entry confirmation, which is the breaker structure. And now we just have to wait. Price trades into it. Right over here in this fair value gap, this is our entry anywhere in here. So it doesn't matter if we took it at the 50%. Most cases, that's where I take mine, either at the 50% or lower, depending on what time frame, but usually it's the 50%. And I'll just let price play out. All right. So this is where price is currently at, right? Currently still in this trade. If I was to close, it didn't give me my 1,000 pips, which is fine, because I'm understanding what price is doing according to the higher time frames. So let's go over why. Again, I was looking for this setup to happen. The narrative, right, according to the higher time frame, is bullish. Why are we bullish? Price traded below lows, trade into the fair value gap on a daily time frame, where we'd be expecting price action to be bullish. On the 4-hour time frame, what do we have? We have a bullish order block on a 4-hour time frame. Right, this last down candle right here. Okay, and this is our second narrative, right? According to the 4-hour, we have our targets, the highs, and our entry confirmation again. It's actually on the 1 minute. Doesn't really matter if it's a 1 minute or 5 minute, 2 minute. This is a clear swing high getting broken. Price trades above it right here. And what do we have? We have fair value gaps for entries. So that's why I decided to take this buy. Right. And had I, if I actually took my entry, if not at the 50%, then at the low of the fair value gap, then my risk reward would have been a lot better. Give me 250 right here. Right. And if I was going for, my usual 1,000 pips, right, price almost would have hit it. But that's my system. I simply look for, whenever I am scalping, I look for 1,000 pips to be made, and I'm only looking to risk 250 pips. And since we're looking at the indices, it's 25 points of risk and 100 points of profit, and it all, I guess, converts to 250 pips and 1,000 pips, instead of saying 25 points and 100 points. So that is it for today. Hopefully I did help anybody out or show you guys a different way of scalping with high probability. and why you should be looking to trade in specific directions and not against, the whatever the smaller time frame is telling you. Because if we were to look at the lower time frame, right, we're bearish, especially on a 1 minute time frame. We look very bearish. On the 4-hour time frame, price looks bearish as well. On the daily, we have a shift in market structure. So on the daily is looking to reverse to buy. All right. So thank you again, guys, for showing your support. And for those who still aren't clear on what I've just explained in the video, take your time to not only study and backtest more efficiently, but also take your time to go back and watch ICT's videos. It's free on YouTube. His stuff is amazing. Do not listen to the haters, because they just couldn't understand it. The ones who hate on his stuff are the ones who couldn't get it. And that's just it. It is what it is. So, it's all up to you to just go back, study his stuff, take notes, backtest. Go and whenever you're backtesting, take notes on whatever you're backtesting. Take notes on whatever you see, whether you write it out in words, draw it out, like physically draw the candlesticks, or both. I do both. So not only do I have a written explanation, but also a visual explanation of whatever it is that I'm backtesting. All right. So thank you again, guys, for your support. Definitely, if you haven't already, like, comment, subscribe. And, I'm definitely doing my best to be a little bit more consistent with these videos. And I hope everyone has a great rest of their day.